Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm going solo to talk about gold and what gold stocks you should be buying, because gold is trading near its all-time highs. It's been hitting record highs this year here in 2024. And while no one's paying it much attention, this is a good time if you are interested in gold to maybe consider what areas should you be investing in around it. Because just like with energy, when the gold prices soar, the underlying companies who are getting the gold out of the ground can make a lot of money with the price at these levels. And that's what it's all about. You might want some of that free cash flow that they're generating. And some of the big gold miners are very shareholder friendly. So where should you be investing? I'm going to take a look, and we're going to start with just buying the physical gold. We know since the ETF launched just about 20 years ago, maybe a little over, maybe not quite 20 years, but close. Maybe it was 2006 is when the ETF launched. Then you could actually buy the physical gold in an ETF form. It's easier than buying jewelry or the coins or bars, for goodness sakes. So you can buy the ETF still. And that ticker is G as in George, L as in Larry, D as in David. But I wanted to take a look at some of the other options outside of just owning gold. Now, if you have owned gold over the last year, you're up 30%. That is beating the S&P 500 during that time period. So that's not too shabby. But maybe you could get a bigger return off of actually owning some of the miners and the people who are getting it out of the ground. So that's what I'm going to look at today. I have three options to talk about, and they're all kind of interesting and a little bit different. So be sure to stick around, obviously. Okay, so the first one I want to talk about is, the first two are really big cap miners. And there's been a lot of consolidation in the industry over the last couple of years. And so there's fewer and fewer names. I used to buy the gold miners back 10, 15 years ago. And so I was kind of familiar with what was out there. And so I was surprised this time when I've started looking around at them again that some of my favorites no longer exist or have just obviously been bought out by someone else. So similar again to the energy industry where we're seeing a lot of that consolidation, you're seeing it also in gold because mining is expensive. It costs a lot of money to get it out of the ground. You have labor costs. You have inflation, you might have weather issues, you will have geopolitical is what I always call it. And that means you don't know who's going to be in charge of the country that you're drilling in necessarily. And so that can bring a lot of risks and dangers to these companies as well. So there's a lot going on with them. And I follow the philosophy of John Blank on these types of things, where he has always said, don't be a genius. Gold is at new highs. You don't have to search around for some small cap, random gold company that no one has ever heard about. You can just buy the basic big cap, well-known miners, and that can be a good play when a commodity is in an upward trend, as this one is. So don't be a genius. Just go with the basics. And so that's what I'm going to do here today. So we're going to start it off with one of those basic companies. One I have just recently bought for the value investor portfolio here at Zacks, and it is Newmont. Ticker N as in Nancy, E as in Edward, M as in Mary. And I am, of course, going to show my screen. So those of you who are listening, I'm going to describe what I'm seeing on the screen on Zacks.com, of course, and the rest of you can now see my screen. So we have Newmont. It is now a Zacks number 3. It was a 1 or a 2 just recently, But now that earnings are a little bit in the rearview mirror, a lot of these companies are dropping down to the more neutral, because a number 3 is a hold at Zacks on the rank. And that's just where 80% of the stocks are. There's nothing wrong with the number 3s. It does just kind of mean maybe the estimates are a little bit older and it's just kind of dropped down to this neutral zone, as I said. So you can see it's got a C for style score, value for value. It's got a B for the growth side, C for momentum, but its overall style score for the VGM is a B. That's the second highest level. A is the highest. Scrolling down, you can see why I bought it for the value investors, trading around 18 times forward PE, but look at its PEG ratio of just 0.37. That's really low. A PEG ratio under 1 means a company has both growth and value. And here's the dividend yield over here. It's at about 2% right now. So Newmont has a strategy right now where they're paying a base dividend of $1, and you can see that on Zacks. And they have $1 billion share buyback plan. And if the free cash flows allow, then I'm presuming they will go above just that base dividend payout on any like free excess, which is what the energy companies have done over the last couple of years as well. But we know we're getting this base dividend of 2% yield. So I'm liking that. And Newmont is very shareholder friendly. Now, looking at the detailed estimates, what is happening with gold at these levels? So Newmont is assuming for 2024 a gold price of $1,900. It is around, we'll just say $2,500 right now. It has been as high as like $2,550. That's around the highs, but we'll just say $2,500 for the purposes of this podcast. So you can already see that they are $600 an ounce above what their assumptions are. That's all just gravy to them. That's all on top of their budget. That's why I like the gold miners right here. And just looking at what is going on here in 2024 on the detailed estimates page. So for earnings, expected to be up 75% to 282 from $1.61 last year. Again, not surprising given where the gold prices are. Now, remember, just like with energy, they have to get it out of the ground. They actually have to do the production to get these numbers. So keep that in mind. And then next year, another 20% growth up to 340. And you can see on the revenue side, big revenue gain for this year, 47% to 17.4 billion from 11.8 billion. Now, Newmont isn't just a gold miner. It does have copper and some other metals, but gold is its dominant product, with copper being secondary. Also, you need to pay attention to where these gold miners are drilling, because as I said, there are geopolitical risks along with everything else that's going on for these miners. And so Newmont is very well diversified globally, but it is big in North America, Central America, and South America. It is divesting of some of its core assets. It already, or non-core assets, I mean. They've already announced this as well, and they expect to get about $2 billion worth of cash for some of these non-core assets. They just announced that they are selling some assets in Australia for $475 million, and they're getting some of that in cash and some in stock to the seller. So that's also going to really shore up the balance sheet as well for them to focus on these core mines that they want to be in. What are the analysts doing? So they're still pretty bullish. You can see the last 60 days. That was when the last earnings report came in. 5 estimates are up for 2024, 4 for 2025. So much depends on the price of gold here. Just like with oil, when WTI rises, so do the earnings. When gold rises, so will these earnings, as long as they're getting it out of the ground. So that's kind of key. What does it look like on the price and consensus chart? That's my favorite chart. should be pretty good, right? With these gold miners right here. And yes, you can see up and to the right, it is a little bit messy because the prior couple of years it has been down and to the right. So earnings have been falling the prior 2 to 3 years, but now they are going in the right direction. That's when I like to buy commodity stocks, when the earnings are turning around like this. And then you can also see from just what the chart is doing here, shares did sell off in 2023 and bottomed in early 2024. They're on the upturn here. So, but again, still cheap, but nowhere near their 2022 highs. It's going to have to almost double to get up to that. And so I'm liking where it's at right now. Over the last year, these shares are up 30.9% over the last year. And you can see not as great year to date because they did sell off to start the year before they started this recent surge up. But that's why they're cheap. And nobody's really paying this much attention, even though we're getting new highs on gold every couple of weeks, it seems right now. So that's Newmont, ticker NEM. Then the next big gold miner I wanted to look at is Barrick, and it has the other famous gold ticker, which is gold, GOLD. So don't get Barrick confused with GLD, which is buying the physical gold through the ETF. GOLD is Barrick Gold, but sometimes when you put it on the chart, it does just bring up the gold price. So be warned, it's not trading at $2,500 or higher. It is at $1,957 right now. So if you see $2,500 when you put it in there, you have to course correct. You have to go back in there and make sure you're getting Barrick Gold. So Barrick, also one of the huge mining companies. They are big in gold, but they are growing their copper exposure. Copper may not be in right now, but there's always need for it. And when the global economy heats up, so does the copper prices. So I like it that some of these companies also have quite a bit of exposure to copper. So they are global. They're in all the major mining areas, but they have more exposure to Africa and the Middle East than Newmont does. 2024 guidance, their cost of sales per ounce is at $13.20 to $14.20. So that's the cost for them of the sales. And as I mentioned, gold is trading around 2,500. So quite a nice differential there on their cost of sales, at least on Barrick Gold. They too have a $1 billion share buyback program, and they are doing performance dividends. Let's take a look and see what their dividend is yielding. So right now on Zacks.com, it says they're paying 40 cents a share annually, and that's 2.07% on the dividends. So just slightly higher than what Newmont is paying right now. Forward PE is a little cheaper, 15.8 is the forward PE, and PEG ratio of 0.48. So also showing that there's growth and value, just like Newmont. What are these detailed estimates looking like? I feel like it's probably going to be similar to what we just saw. And let's see. Yes, it is. Analysts are a little more bullish here, though, it appears, just on their earnings estimates revisions. So for 2024, expected to see $1.22. That's up 45% from 84 cents last year. And then $1.58 for next year. That's up about 30%. And on the revenue side, revenue growth of 13% this year and 10% next year. So a little more consistency here with Barrick than we saw with Newmont, which is seeing like this big surge this year. And then unclear for next year, really what's going to be going on there, other than earnings were expected to be up double digits again. We have one estimate revised higher in just the last week for this year, but four in the last 30 days and two for next year in the last 30 days, although one has been revised lower as well. So what is this all looking like on the price and consensus chart. Barrick is also a Zacks number 3, which is the hold, but it has an A for the VGM. So an A on value, a B for growth, an A on momentum. So that's pretty impressive to get the A VGM. That's the highest score. But Barrick looking even more bullish than Newmont here, at least on the earnings side. You can see it just up and to the right, starting a couple of months ago when these earnings estimates started to turn around. But the share's not doing quite as much. This is what I mean, that the earnings are really starting to turn, but the street hasn't really figured it out. This one peaked in 2020, the start of the pandemic, and then it had a little bit of a rally again in 2022. But now, did sell off the last couple of years, trying to bust it out again here, getting briefly over $20 a share before it's pulled back a little bit. So year to date, the shares are only up 7.3%, and over the last year, up 22.9%. So as I mentioned, the street is kind of ignoring a lot of these miners, even with the price of gold at $2,500 an ounce and their cost of sales per ounce at $1,320 to $1,420. So I'm just liking this whole setup. If you like free cash flows and earnings, this is where to be. Now, there are several other large caps you can also look at in this category, and I'm going to show you where to find them. So this is in the mining industry, and it's in gold. We do have that as an industry on the Zacks industry rank. It's actually in the bottom 42%, which is kind of surprising given what's happening with some of these earnings. But you can scroll down once you click on that link, and you can see all the companies that are in this industry. And up at the top is Eldorado Gold. They have the Zacks number 1 rank. That ticker is EGO. And then IM Gold is number 2 on this list, also a Zacks number 1 rank, IAG. And it's worth looking at the number 1 ranks to see what is really going on there. Why do they have the number 1 ranks and some of these others have fallen back to a 3? Some of it could just be when they've reported earnings, as I mentioned. But now that we're looking at this, there are 37 companies in the mining gold industry. So you would have a lot to look at if you're like, I want some other names, Tracy. You can go on here and look to your heart's content, actually. But I did want to let's just look at Eldorado and see what's going on to get it that number 1. So it's the Zacks number 1. Style score, VGM score is actually a C for Eldorado. So that's a little bit lower than the other two we're seeing. It's very cheap at 11.9 times, but we need to look at the detailed estimates to see what's really going on to get that number 1. Okay, it doesn't have quite as many analysts, but maybe it does once we get to the full year. Okay, so 2024 earnings expected to be up 136%. 5 estimates higher in the last 60 days, 1 in the last 30 days. And then for next year, just 3 higher in the last 60 days, and then nothing else, no cuts. So I'm not really seeing a big difference in what this is and what the analysts are doing compared to Barrick or Newmont, but yet it has the Zacks number 1 rank. So the rank is always mysterious. You can't always tell exactly why certain stocks are where they are. Sometimes it's just a matter of the magnitude is bigger. And then we do have this agreement with 5 estimates changed there in 2024, but we also had that with Barrick, and it's back to a 3. So either way, I still do like all of the stocks in this category, and the Zacks rank is a short-term recommendation. I'm taking a look at the price to consensus chart. It's up and to the right for Eldorado, and so is the stock. So this is one of the few that everybody's buying into, and the stock was breaking out at new 5-year highs until just recently, the last couple of sessions, really. And so this is a little different than the others that we've seen. And this is what I do want to see when a commodity is this hot and hitting record highs. The underlying companies should be busting out, but everybody is in this one. And maybe there's something else going on that we would need to go and listen in on their conference call to find out what is the reason everybody's getting into only this stock, and shares remain cheap at 11.9 times. So take a look at Eldorado Gold and do some more research, because that one also looks interesting here. But I wanted to just share another area you can get into that does show up under the mining industry that, unless you really looked around at a lot of these stocks, you may not be aware of. So some are not actually mining themselves. They're in what is called the streaming and royalty side of the industry. And one of those I've always liked is Royal Gold, ticker RGLD. R is in Robert, G is in George, L is in Larry, D as in David, Royal Gold. And they're also a number 3 right now. And they have a style score of a D actually on the VGM. But that's also because value is a D, and this one is more expensive. They're trading at 28.7 times with the PEG ratio of just over 1, so 1.1. They do pay a dividend yielding 1.2%. And what Royal Gold does is they're in the streaming and royalty side, and so they're not actually mining it. So if you are interested in kind of avoiding some of the risks that are associated with, having employees and paying them to go mine it, and having the geopolitical risks, then Royal Gold could be for you, because they're entering into contracts with the miners to either have the royalty interest, which is on the actual property and the product coming out, or on the streaming, where they usually enter into a contract and get the product for a set cost, and someone else is mining it out of there. And in 2023, Royal Gold was, let me see, what were they? They were 31% royalty interest, 69% on the streaming side. Now, because there's a little bit less risk, investors are willing to pay this higher premium to get the streamers like Royal Gold, because they're still getting it out. The cost to get it out is still similar to like what Barrick and Newmont are seeing, $1,300, $1,400 an ounce. And it's still, trading at $2,500 an ounce. So good free cash flows and all of that. And you just have less risk. So they are 76% on the gold side. They also are big in silver and copper. They're in 17 countries, with Canada and the U.S. being their largest exposure. Canada is 35%, U.S. is 20%, Dominican Republic is 13%, Chile is at 8%, Ghana is at 6%, Botswana is at 6%, and then Mexico is at 4%. So those are the biggest exposures that they have. And another reason to not have the streaming, again, is you're not exposed to the operating costs or something going on, either weather-wise, an earthquake or things like that, that bring up operating costs because of the streaming and the royalties and how that works. At the end of 2023, they ended with a cash balance of $104 million. What else is going on? Let's look at these estimates, because I am kind of curious. Do they look kind of the same way? So you're seeing some NAs here on some of the quarterlies. Sometimes that we see the NAs for these miners because they're either a foreign company. They may only have analysts who cover them for the year and not on a quarterly basis. They may only report twice a year. Some companies only do that. And so then the quarterly data gets kind of messed up. But thankfully, the Zacks rank is on the yearly data, and that's what we're going to look at. So The 2024, we have two estimates higher in the last 60 days, but also two are lower. So we have some cutting here. Maybe these analysts just got a little too bullish because earnings still expected to be up 33% this year to 470 from 353. And then another 25% next year to 589 from 470. So I'm liking all of that, but you are paying this higher premium 28 times to get a little bit more security on, the background of what these earnings are. You don't have the same risks as just owning the miner outright. What does this look like on the price and consensus chart? It should be going up and to the right, and it is, but a little bit of choppiness, just like we've seen with everyone. But this chart is also interesting. You've seen some big surges in it and then sell-offs, surges and sell-offs. And you can see it is back to trading at almost, 2-year highs, it looks like, or 1-year high at least right there. But again, the shares are already more expensive than the other two. But these streamers, royalty type companies are an option if you just really don't want the risks of the big mining companies. Or again, you can just buy the gold outright in the ETF, which is ticker GLD. So there are a lot of options out there, and a lot of these companies are being ignored by the street right now, except for maybe Eldorado Gold, the Zacks #1 rank. That one is near its 5-year highs, but the other ones are not, even with gold busting out seemingly every other week to new highs, and all the rest of their numbers looking pretty good here with these miners. But also remember, you have the cost side of things, and they do mine other types of product, not just gold. So the price of those products also will come into play as well with the earnings. But all of this is accounted for by management, and the big mining companies put out quite nice event presentations and events and attend a lot of the commodities conferences. So go over to their websites and check those out because they're a treasure trove of information. Sometimes right down to like what each mine is actually producing and what's going on there. So check those out because that's where I found a lot of what I talked about here today. And you need to do your own research on these companies. A lot of them are not heavily followed, but surprisingly, some of these big caps still have 5, 6 estimates on them, and that's good to see. So if you do take a look at any of the smaller companies, then you'll see that they're just going to be a lot less followed than what these are. And like I said at the beginning, you don't have to be a genius. When the commodity price is rising, you just have to pick companies that have some good management, can get that commodity out of the ground, and are shareholder friendly, going to pay some of it back to you. And Royal Gold, and all of these actually are paying a dividend right now. And so keep that in mind as well. You might as well get some a little bit extra out there, right? So the stocks we talked about again today, Newmont, ticker NEM. They're the ones divesting some of their non-core assets right now. Barrick Gold, ticker GOLD. That one's easy to remember. They also growing their copper exposure there, so that should be interesting. We had Eldorado briefly. I mentioned them. E as in Edward, G as in George, O, EGO. IM Gold is the other #1, so I'll mention them again too, and that is ticker I. A as in Adam, G as in George, IAG. And then we finished up with the royalty and streaming type of miner, but they're not actually mining it themselves. And they only have a couple dozen employees. So that's also the difference. They don't need some kind of big infrastructure. And that is Royal Gold, ticker R as in Robert, G as in George, L as in Larry, D as in David. And I'm going to be watching this gold story as we go along here in 2024 because it is very quiet right now. And I like to get get into things when nobody's really paying them any attention, right? And nobody really is for gold, even at the all-time highs. So that's when you want to buy some of these mining stocks when the earnings are turning around, the free cash flows are looking good, but the stocks have yet to really break out other than with El Dorado. And they are fairly cheap and priced well. So these are things I like, and I'm going to be watching them. So be sure to tune in to all of our podcasts here as we cover all of these topics as we go along here in 2024. There's more than just tech going on. There's these other buying opportunities, and other bull markets are actually going on. So be sure to subscribe at Apple Podcasts. We're on Spotify. We're on Amazon Music. We're on SoundCloud. And of course, we're on YouTube. Go to Zacks.com/YouTube to get our channel. Subscribe over there. But be sure to get us somewhere. And I'll see you again next week with some more stocks.